Welcome everybody to a new analysis of Tradomics. In this episode, we analyze Mastercard. As usual, we're going to apply our T-cycle analysis, a methodology that is based on cycles and especially the duration of different cycles that enable us to predict in a mathematical, statistical way the future direction of the price. If you want to know more about our methodology, click on the pop-up banner menu on the right-hand side. So regarding Mastercard, in order to understand what we can predict by using our methodology, we have to step back a little bit and go backwards regarding the latest couple of years of the rally of the upward trend. So we can start with this law occurred on the 13th of October 2022, in which we have had the evidence of a nearly downward cycle that ended on the 27th of October 2023 after exactly a total duration of 260 bars or 260 days. On the right hand side, you can always check up our durations. So 360 days is embedded between 119 and 338 days. So basically, it's a median duration of a T plus 5 of a nearly, in this case, downward cycle. And this downward cycle has been positive because the low in which it ended was higher compared to the low from which it started. This T plus 5 has been divided in a first T plus 4 or a first 6 month cycle or semester, and the second downward cycle or a second T plus 4 or 6 month cycle. Regarding the reversal or the upward cycle, we defined the stop occurred on the 24th of January 2023 as the starting point of a T plus 5 upward cycle, yearly upward cycle, that in this case has been positive, given that the top in which it ended was higher compared to the top in which it started. And this T plus 5 or upward cycle has had a total duration of 291 days. So in this case was stretched more compared to the downward cycle. And generally, when there is an uptrend or a rally that continues for several months, the upward cycle have a tendency to get stretched towards the maximum duration. This is really important because when we have a volumetric tendency, like in this case that started in 2022 and now is imposed, but we have had the evidence to have a continuous rally for 2 years. The upward cycle have a tendency to stretch the durations to allow basically funds to step in and buy different bucket of stocks all the way through. So here we have had mostly maximum duration, as the maximum duration is 338 days. Now, what happened? So, what happened since the 21st of March 2024? So, let's zoom in. And the first consideration that we can do is the following. First of all, from this top, we have had the evidence of a new yearly T plus 5. So, by definition, for a T plus 5, in order to generate a T plus 5, we need a certain number of candles, a certain number of days where the price cannot go back to the top, and we need 2 degrees less of cycles in terms of duration. So we need a T plus 3, a total duration of at least 48 days or 48 bars that cannot go over the top from which we think the T plus 5 has been developed. In this case, we have had a total number of bars below this top of 69. So here we have already the duration in terms of time to have here a T plus 5. So for sure, this is a T plus 5. And now we have also the minimum duration, or even more than the minimum duration, to have the condition. And this is the first consideration. When there is a start of a new T plus 5, then we have downtrend. Downtrend or a steady state situation in which the price cannot go over the top from which it started. It depends, of course, on the hedge funds or the market operators, whether if they want to keep the price at a steady state level or they prefer to have more a sharp decrease. But in any case, this is the first thing. The second thing is we have potentially a beginning of a T plus 3. The beginning of a T plus 3 might be on this top on the 24th of June, because we have had already a duration of 64 days out of 89 in which a new T plus 3 can be on the edge. So if a T plus 3 is on the edge, then we can have, as the same for a T plus 5, downtrend, and we need 2 degrees less, so a T plus 1, 13 and 22 bars, between 30 and 22 bars, in which the price cannot go back to the top. So over on the short term, if here we have a T plus 5, then we might see for the next week and also beyond the next week downtrend. Okay, so this is the second consideration. Now, the third consideration is the following. So we always have to check not just the upward trend, but as the other flip of the coin, the downward trend, or sorry, the downward cycles. So in this case, we have had from this low on the 27th of October 2023 a first positive downward cycle of 3 months. Then we have had another T plus 3 other 3 months. This has been negative. But now what is important is that if this low will be broken up in the next weeks or in the next days, then we will have a condition where a negative downward cycle will be set up, which means that if this turns negative and a T plus 3 can last between 48 to 89 bars, and here we are at 39 bars, then the overall extension of the or the prosecution of the cycle will be to the downward, with of course some bounce of the dead cat, but then we will get lower and lower. So this particular swing and the level of price, which is at $436.90, is key for the next week or the next days to define the future direction of the price. Future direction of the price that we can calculate. So if we break up this low, given that here we have evidence of a T plus 3, but eventually also a T plus 4, then we might have the condition to proceed to the downward side at least until the 12th of July 2024. Or in the worst case scenario, we can proceed to the downward side until the 10th of September 2024, if this is a T plus 3, because here we have also a T plus 4, because given that we have had more than 37 bars over this low, a T plus 4 minus 2 is a T plus 2. So the total duration here is a T plus 2. Here we might have also T plus 4. If this is a T plus 4, then we can further extend the time in which the funds or the market operators can push further the price to the downside. Okay, so in any case, this is a point of control. It's fundamental that this will not broken, but given that we are really close to it, we have a high likelihood that on Monday, from Monday onwards, this will be broken up. And if this is broken up, then we're going to have a negative downward cycle in which we can further extend the downtrend until July, 12th of July in the best case scenario. Otherwise, we can proceed to the downward trend until September of this year, so September 2024. If this is a T plus 3, if this is a T plus 4, then be aware that in that case we might also further extend the downward trend until the 16th of September 2024 or 17th. Okay, so that's the also the mostly the midterm overview. From here we have had the first weekly cycle, and here the second weekly cycle. So here we can also update the chart. Let's do it like this. So here we can put a weekly cycle, and also here another weekly cycle. So for the beginning of another weekly cycle, let's gauge the time. You can always check the duration. So here we have had 8 days, and here we have had 10 days. So this is the 11th candle. So from Monday onwards, given that we are mostly finished or the time is run out for a weekly cycle, then on Monday we can forecast a push to the upside because we have 10 possibilities out of 11 to have the start of a new weekly downward cycle. But then be careful, because if from Tuesday or Wednesday we're going to go back to this low and we're going to break it up, then you will see a further downtrend. For the time being, we can be, let's say, we can stick to the fact that as far as we don't break this low, then we can also have a steady state condition. So from Monday onwards, 10 possibilities out of 11 to have a push to the upside, but really be careful here at $436.90. Thanks for watching, and see you to the next episode.